Beautiful sideway movement for the weekend. Yes, what else did you expect? Hello Adrian, and welcome back to another episode of the Dang Oracle. It is 7:30 p.m. and my time zone is UTC +8. So welcome everybody who is watching around the world. Hope you're doing well on this beautiful Saturday evening. For some people they call it the first day. For some people it's the second day of the weekend. Depends on how you're looking at things, I guess. But for me it is the first day off because technically Friday, I'm still working all through the night. Yeah, it has been a little bit of an eventful night. Nothing that crazy, of course, because it is weekend. So first, let's say hello to everybody who is joining the stream once again. Hi Alvin, hi Lex, hi John, hi Jeremy, hi Gita, hi Tina, hi Darren, hi Cedric. Hope you are doing all well. The hardcore crew is here, so we can go on and move on with our COVID situation first. What else? So, as we have seen yesterday, we have crossed the 2 million cases in the US. Brazil is moving up very, very rapidly. As we can see, over 800,000 already, nearing that 1 million marker very, very quickly, very quickly. Hi, Henry. Russia over the 500,000 as well. Hi, Nikolai. So yeah, those are the biggest, the big issue countries. And in the total cases, we have over 7.5 million cases worldwide. USA is still moving up. Brazil is really a very big issue, as you can see. Russia as well. India as well. As you can see here, Spain and Italy is slowing down and sloping down. So yeah, we've been talking about this for quite a while already. Some good, some bad. Hi Andrew, hope you're doing well. So let's move immediately back into our Bitcoin. Yeah, well, it's still here. I still left it here, as you can see, what I kind of was expecting. So I told you guys most likely we'll be having a sweep down towards the EMA 200 and then most likely sideways actions during the weekend, but slowly creeping up towards around the 9,750 area or something like that. I can remove this this one because yeah, basically that's what I expected, what I'm still expecting. That is for me still what I'm thinking, but like I told you guys, I would stop my close. I would close my long. Sorry, I would close my long if the daily candle would be closing below the EMA on the daily. And this morning when I woke up, I was looking at the traditional markets. We'll go over it in a little while. And of course our Bitcoin. And I saw that Bitcoin closed below the EMA 21 on the daily. So for me, there was no point for having so much stress during the weekend and leaving my position open. So I closed it at like 9,450 or something like that. So a nice $400 spread profit that I made, but I made a little bit of a loss, of course, with my 9.690 ish long that got stop lost. So overall still pretty decent on the trade, so can't complain. But yeah, as we can see here on daily, we can see that we are forming some sort of like a falling channel right now, and like you most likely should be aware, is most likely falling channels do break potentially probability do break up a little bit higher probability towards the upside than the downside. So if we are moving up towards where I'm expecting is around the 9.750 area, which is this area here, and then once again we will have to be looking out. Do we finally break this zone, or are we going to get rejected of that 9,750 area and move back down towards here, this area once again, which is the area that I've been talking for a long time already, around the, like, let's say around the 8.9k 9k ish area now, because it will be a little bit lower than the EMA 55, of course, right? So around the 8.9 to 9k ish area, that area that we've been talking about. And then do we then break this zone towards the downside? That would be very bearish, of course. Or do we bounce from here, moving back up once again? Well, if we are looking like this as a falling falling channel, we can sort of make a measured move as well, right? This is some sort of like a bullish movement. So if we do break up from this zone here, we would be retaining and going back towards our 10K area, something like that. And like I've said before, this time if we do break up towards the 10K, I do believe that we'll go all the way towards the 10.5K, because we've already touched this one 10.2K ish area. But on the other hand, if we are bearish, obviously if we are breaking down below this green box here, all hell will break loose, and most likely I do expect this a very quick drop towards this 7.9-ish area, but I don't really think this is going to be holding as well, and then move back down all the way to like 7.5K-ish area, which I'm gonna put a line as well, or a box as well, because my chart has been removed with that Windows update. Amazing Windows update. Nope. So that would be this box here. There. So yeah, so I don't think this box is going to be holding much. I do believe that 7.5K-ish area might be potentially, I would say, potentially could be our low for the short term. Let's put it like that. That would be also on the weekly, of course, this green box here that we've drawn. As you can see, a lot of support here on this area, and also our EMA 100 on the weekly, as we can see here. So things would be quite bearish though. Like I would not be super happy if things would be going that way, but it's definitely a possibility. So we have to, you know, we have to take note of that. Some people do think that we are even going lower towards like 6.8K area. Why do people think that? Well, they're hoping and they're looking at this as some sort of like a inverse head and shoulders pattern, as you can see here, and then we break up and go to the moon from here. So some people are looking at that potential pattern that we can be forming. For me, I really don't like it. I really don't like it. Even if we are forming some sort of like an inverse head and shoulders there, we are inverse head and shoulders usually are when we are in a bottoming a big bottoming downtrend, and it would be a reversal towards the top side. But we had our serious amount of bounce here, and then forming a inverse head and shoulders here. I don't think it's a very realistic pattern, to be honest. If this was a major downtrend like this down here, and then we form a inverse head and shoulders here and on this area, and then pump up, that would make a lot of sense. But after a big pump here, then a failed, and then another failed, a third failed attempt to breaking this resistance, going back down, and people saying that this could be a potential, 6.8K could be potential inverse head and shoulders. It's it's a little bit hopium, let's put it like that for me. I think if we do break this 7.5K, I think it's way more realistic. We are going to most likely be seeing these kind of areas around the 6,000, and most probably even lower towards like the 5K-ish areas, and breaking this this triangle, to be honest. So breaking the 7.5K area would be quite bearish, I would say, for me, and personally I don't really believe that inverse head and shoulders pattern at like the 6.8K. I think yeah, well, who knows, right? Everything can happen. We have to, that's why we're just analyzing this on a daily basis. But it kind of would not make a lot of sense for me, that inverse head and shoulders pattern. But always a probability. There's always a probability. But for now, we are, like I said, we are analyzing this on a daily basis. There's no point really to be looking too far ahead at like 5K or 3.5K or whatever, those kind of numbers, while we are at 9.4K. Right, the ranges right now is quite simple actually. After we have closed down the traditional markets, we'll go over that in a little while, and also the CME chart. Right, the CME chart is very important for us, and we had finally yesterday we had our close. So let's go to our CME chart. So this is our weekly candle. And it is a beautiful, yes, a doji candle. So you know what that means for me. This weekly candle is basically saying a lot of indication. So if we are going to next week, if we are going to be breaking below this level, and that is around what is it, 9,000. Well, actually, I can just take a Fibonacci, and then we can see what the exact number is. Where is it? Where's my Fib? Here. Lol. Yeah. I'll put the magnet, and then you can see it. So here, 9,095 is the magic number. So if we next week, if the price would be below 9,095, that would mean most likely break of the structure. So if that would break, this zone would break, for me, most likely we'll be going towards eventually, not in one drop, like I said, not in one drop, but most likely towards the 7.5K ish area in the long term. So very, very important that we are holding this candle on a weekly basis. So 9,095 on CME would mean on the spot price around let's say 8,950 or something like that. This is the zone that we've been talking about, right? So if we are breaking around 8,950 or below this, basically start closing candles below this bullish, well, for it's still bullish uptrend channel. So if we are starting to close down candles below there, in the long term, in the macro perspective, I do believe that most likely we'll be heading towards that 7.5K ish area eventually. Not saying that it's going to be immediately, but if we start closing there, we're going to do something like this, move back up and then move back down, move back up and then move back down, something like that, all the way towards the 7.5K. So that weekly candle is quite substantially important. But on the other hand, we have to be positive as well, right? We have to be positive as well. If we are breaking above this line, 10,111, right? 10,111. If we do break above that, which is on spot price around the 10K level, right? So if we are breaking above that level, then everything is amazing, right? If we are breaking above that that 10,011, oh, why did it move? Wait, let me do it again. 1 second, because I don't want to make mistakes here. It's a quite important number. Oh, it's 10,120. So my apologies. 10,120 is the magic number on the top side, which means around the 10K on the spot price, around there, right? So of course, if we are breaking above 10K and closing some weekly candles above there, then we'll be entering this zone here, and then I expect us to go all the way really towards 11.5K. There's very little stopping us, like I've explained before, very little resistance. So now that I have the fresh chart, I can put my green box to the top side as well. So that would mean this box here, 11.5. Beautiful, isn't it? Isn't it beautiful? Okay, so yeah, we've started the month by saying kind of like a critical month. Well, it doesn't necessarily has to happen this month, but over the next couple of months, that's basically where I see the more midterm price will be going towards to. So either the 7.5K or the 11.5K, and you know, the more information, the more candles we are creating on a weekly basis, of course, the more information we'll be getting. But those are the two key numbers on the CME chart that we have to be looking at. 10,120 for the top side. If we break that, most likely towards 11.5. If we break down to below 9,095, right, this candle here, 9,095, then most likely will be higher probability. Let's not be that negative. Let's say first drop towards like around below 8k, 7.9k, but like I said, that would be like a 0.5 pip retracement. So I think that we would eventually go to like 7.5k ish area, which is a 0.618 pip retracement, by the way. So it's not just support levels, but also the Fibonacci level is matching over there as well. So just keeping that in mind as the grand picture for on a macro perspective, and that's basically what this doji candle told us after this close. Let's take a look a little bit deeper as well on this weekly candle close, right? And as you can see, what I was hoping that we would be avoiding is that we would have a lower low than our previous weekly candle. And as you can see, we closed, the price was below the previous candle, which is obviously not that great as well. So does that mean that we will have continuation towards the downside next week? Most probably. So what could happen is the following. During the weekend, like I said, we moved back up towards this 9.750-ish area, and then next week we drop back down towards this area here and complete our cycle. So that's a pretty high probability, because this weekly candle is showing a little bit more continuation towards the downside, at least a higher probability towards the downside. So that's basically what I'm looking for. Most likely a small push towards 9.7, 9.8. So in the short term, nothing has changed. Like I said, we are waiting for that hidden bullish divergence to be playing out during the weekend, and maybe even the start of the trade, push the price a little back up. But looking at the CME chart, kind of are more feeling that we will be getting one more push down towards the bottom side of this falling wedge, falling channel, more likely than probability of us immediately breaking up. But who knows, right? Who knows? I'm just putting down some probabilities based on the candle formation that we are seeing on the CME chart. Let's take a look on the traditional markets, because those are basically the ones that are going to be indicating what is going to be happening on the next couple of weeks. And if we are looking first on NASDAQ, if we are looking on the weekly, kind of the similar pattern, this doji candle, as you can see, this doji candle, similar on NASDAQ as well. And this is basically the same thing. If we are going to be closing a weekly candle below this point, yeah, then I do expect us to go all the way down, and you can see the green box that I've already put down there already. So back to around the 9,000 level or something like that. If that does happen, then I do expect Bitcoin to be going down towards that 7.5k ish area as well. So pretty similar thoughts or correlation, right? So looking at the daily, the one thing that is positive by the daily is that we closed above the EMA 21. So are things that bad immediately? Not that bad immediately just yet. So that's the good thing. So that's one of the reasons I still believe that hidden bullish divergence towards the 9.750-ish, 9.8k is, most likely going to be working out first, before eventually we might possibly get that dump more towards the downside. But yeah, who knows, right? Who knows? The market is going to do what the market wants to do. Taking a look at the S&P, the S&P is actually way more negative than the NASDAQ chart. Let's take a look on the weekly chart. As we can see here, the weekly chart is actually showing a bearish engulfing candle. As you can see, this is definitely not good. This is definitely not good. But we are still, of course, above this support line at 3,185, so above our EMA 21 and so on. But on the weekly, this is definitely not a good close on the S&P chart. If we are looking on the daily, daily closed below the EMA 21. Obviously, this is worse than NASDAQ as well. And this looks like it wants to have a small bounce up and then continuation towards the downside as well. Where do I think that this is going to be going towards the downside? Most likely around this 2.9k area, where we have a lot of support there. So I'll make a green box here, where I do think that we will at least have a bounce here. So around the 2,900 ish area is where I think that we will be making that pullback as well, similar to like Nasdaq, right? So if Nasdaq is making that pullback towards here, then S&P is making that pullback as well, of course, towards this area here, and eventually even could potentially be even lower, because it seems like the S&P chart is a little bit more emotional than the Nasdaq chart. So and then the next potential bounce, I would be looking at this 2,800 ish area. Let's move out this there. Thank you. Yeah, so around the 2,800 what is it, 2,850 ish area would be my second support bounce zone. So those are the two areas that I'm looking at, but it does look like some sort of like continuation on the S&P. On Nasdaq, not immediately just yet. On CME, it does seem like there will be some continuation to the downside. So a lot of things that can happen, right? But am I fully like? There's a lot of people who are saying like, oh, finally the market is going to have that epic crash towards like, people are immediately after this crash are immediately talking about like, oh, we're gonna go back to all-time lows and lower lows and those doom scenarios. I really don't think that we will have that situation. The main reason why my logic is just the following. They are just keep on printing money, right? FAD is just keeps on printing money. It keeps on pushing out all kinds of things to be saving the economy. That is one, and then secondly, we have the new presidential elections in November, right? So I doubted that Trump is just going to be laying back and not do anything to have a chance during the elections, right? So from now until November, I really don't think that he's going to do everything that in his power that he can to be saving the economy, to be making sure that that things go well, right? I mean, at least that he has a chance, because if the economy is into shit and everything is really, really bad, there's no way that Trump is going to be re-elected again, and he knows that as well. But you can see that the pressure that he's putting on the whole FED, on Powell, on the global economy with the trade wars and the oil wars and this and that, you can see that he's actually doing everything he can to make sure that at least the stock market is doing well, because that will be his main re-election point, right? He will say like, listen, we had the worst pandemic ever. People are dying, economy crashed, but look, stocks are still going up. I have saved the economy. And although the smart people know that the stock market is not correlated towards the economy, as you should be knowing, but obviously the more, I'm not saying dumb people, the people who are unaware, they will be looking at the stock market, and they'll be, because everything is retail driven right now, right? I've told you guys, all the people have created a lot of accounts on exchanges, a lot of trading accounts, and they feel like they are the king, right? Because to be honest, the last couple of months, if you are trading stocks, not that hard, right? In a bull market, you buy the dip and you make money. So a lot of retailers have that they are in this hype right now where they feel like they are king, right? And it's that feeling, and it's that what the governments wants you to believe in and wants you to know that think that everything is okay. So that's what I mean. That will be his re-election point. So I doubt it that we will see any major crashes, to be honest. I think they will do everything in their power that they can, and that does bode well for Bitcoin as well, right? So if the traditional markets are going up, it's like the big daddy is going to pull little baby Bitcoin as well towards the top. So am I bearish in a macro perspective? I can't be bearish in a macro perspective just for that if you are believing in that kind of like logic or psychological movement. We have a ton of retail pushing the price up. We have a ton of professional traders pushing the price up, while creating this hype and continuing this hype that we have a V-shaped correction and so on and so on. We have upcoming super important re-elections in November. We have the FED printing money like crazy, buying all kinds of debts and assets on a daily basis just to make sure that the economy, well, not the economy, that the stock market doesn't crash down. So I can't be bearish on Bitcoin overall. At least until I see the traditional markets, completely crash. If the traditional markets completely crash down, then Bitcoin is gonna go to shit as well. I'm sorry for the people that think that Bitcoin is a hedge and not correlated to the stock market, but if I see the traditional market, stock market break critical points towards the downside, I'm out. I mean, I'll be shorting I'll be shorting Bitcoin like crazy. That's just how, in a trader's perspective, that's the way you should be thinking as well. So on a global macro perspective level, I can't be bearish right now. We are so near in breaking this all-time resistance with all this effort, with all this printing, with all this hype that is ongoing. If we don't break it, then it's there's something then we should be giving up on the technology. I kind of feel but yeah, I think we're gonna break up, but I do believe that the correction afterward is going to be, like I said, next year is going to be insane as well. So for all the people who are thinking like, yes, it makes sense, it makes sense that that price is going up, it makes sense that that things are going to be breaking towards, I mean, like I said, probabilities is way higher right now that we are going to be breaking up towards the upside rather than the downside. It's just how it is. But is it going to be happening? That is the question. And as long as it doesn't happen, we can't say that we can't put all our money into it, right? We just have to wait it out and wait for our confirmation. Like I said, the confirmation is a weekly candle close on the CME chart above 10,120. Then go ahead, have fun. Or on the spot price, something that we've spoken about before already for a very, very long time, if we are breaking the 10,550 or our previous high here, 10,550 ish. Well, what is it? 10,556. So basically, yeah. Okay. So basically, that's my reasoning why I am, on a macro perspective, still not bearish at all, as long as I believe that traditional markets are going to be saved. But like I said, the effects of all of this is going to be felt. Maybe not this year, mid next year, end of next year. It's going to happen. It's going to happen. For people that think that this can go up forever while printing money, I think they're a little bit delusional. What I think is a good hedge investment against equity markets heading down long term. That's a good question. To be honest, when things crashes, everything is going to be crashing. Like even hedges like gold, or what you consider a hedge, is going to be crashing as well, right? There's really it's all a matter of like what is crashing slower. That's basically what you should be thinking at. It's like when you're jumping out of the building, you're gonna fall. The question is, how high is that building? How high is that building? If you manage to find a low building to jump off, it will hurt less, right? If you find a high building, it will hurt more. So typical hedges like gold, like all the things that you can think of, gold, real estate, all the normal hedges basically, they will still go down in value. There's nothing, if we are heading towards a financial crisis, nothing is going to stop it. The thing is, you will just be losing less money than than with other things, right? So just think very, very carefully, and like I said, find stuff that has been doing really well during crisis, and that's why you have TradingView, right? I mean, you should be just backtesting on things and looking, okay, well, previously in the crash. But if you look at gold, for example, when we had a major financial crisis, gold died as well, you know, crashed down as well for a really, really, really big amount as well. He fall victim to a hardware, yeah, yeah, yeah. You there's so many scams in happening right now. It's really, really sad. It's really, really sad. You have to be very careful. You have to be very, very careful, and definitely in this kind of state, right? A second corona wave is likely, and Bitcoin is going to see a major dump. Well, first of all, that's once again kind of like thinking that negatively, that we will have a second corona wave. It still has to happen first, right? It still has to happen first. But also, the first time is going to be a lot worse than the second time, because the second time we kind of are a little bit more prepared than the first time. So what's the worst case scenario? Worst case scenario is everything is going to be under a lockdown once again. But as you have seen before, during a lockdown, the stock market has not gone down. It went down. It went in a major dump, but we have a V-shaped correction here. We have higher highs, right? Look at this. So this is when we had Corona. It went down, yes, true, but now we made higher highs. So during the coronavirus, we made higher highs. So it kind of depends on. Do I think that we will have a big dump if some bad things happens again in the second corona wave or something like? I do think so, but do I think that it's going to be as major as the first time? I highly doubt it, to be honest. I highly doubt it. People are going to be like thinking like, yeah, you know, that kind of attitude, because this is what happened, right? We had this, and then people the second time they will be like, yeah, I'm not falling for that. I'm not falling for that this time. I'm not scared, whatever, bring it on. You know, it's just that kind of logic and psychology that people will be having. So do I think it will have an effect? Yes, I do believe that obviously there will be people in fear, and there will be a liquidity grab, like in all crises, where people will need fiat really, really quickly for, you know, to cover their basic expenses. They will be dumping, you know, their stocks, they will be dumping their Bitcoin, they will be dumping everything to be liquid, basically, to be able to afford the basic daily needs during crisis. But I don't think that is going to be as big of an effect as the first time, to be honest. So hoping on that is kind of like I don't know. It's kind of is a long term. I'm really not that bearish right now. Do I think that there's a possibility that we'll be going back towards, like, you know, lower levels, like, you know, 7.5k ish area or something like that? Sure, that's possible, but but I don't I like I said, I can't be bearish on Bitcoin or on anything right now, after seeing what is going on right now, right? We have to, I mean, I never expected the V-shaped correction. So, you know, I entered the long, but I was like really, really scared on the traditional markets, right? I was like, anytime it went up more, I was like, shit, should I just close my position here? I was really scared. I was really, really, really scared. But then at one point, you just saw like, okay, well, this is going all the way, so just let it roll. that's basically what happened. But right now, at this moment in time, it's kind of normal that we have some sort of correction, right? A pullback, not really a correction, a pullback, and just people were taking profits. But like I said, just thinking very, very macro perspective, are people just are the people just going to let this drop? I don't think so, and not at least not before elections happen. After November, it's a different ball game. Let's put it like that. After November, it's going to be a different ball game. Well, if Trump gets reelected, then we can have a little bit of a ongoing show for a while. But like I said, mid 2021, end of 2021 is really when I expect where we can, like, you know, have a really good deal when in terms of like purchasing, and that's what I'm preparing myself for right now. I'm just doing the research on things to buy when that happens, on when I feel like, okay, this is just blowing out of control, because a lot of companies are going bankrupt right now. A lot of people are unemployed, and that will have its effect. Not really right now immediately. People have savings, people have, you know, will try to a lot of entrepreneurs will try to, you know, they're very stubborn, so they will try to keep on going, but eventually that, you know, that is going to be stopping as well, right? So in terms of Bitcoin, back to Bitcoin. In terms of Bitcoin, I don't really expect us to be doing that much during the weekend as usual. Do I think that we have a little bit more strength towards the upside? Yes, I do. Like I said, I keep saying this is forming on the 4 hour, some sort of like on the RSI, sorry. On the RSI, some sort of like a bull flag, right? So, oops, this is quite ugly. Let's make it a little bit more pretty. Something like this. There you go. So some sort of like a pennant, a bullish pennant or something like that. So I do believe that we will have some more strength towards the upside around this area here. Is where, you know, a lot of resistance is, right? So back to around the, like I said, 9.7, 9.8k or something like that is still what I'm expecting. But can we swipe down towards the downside one more time? Of course, it's weekend. What do we expect, right? Can we swipe one more time towards this EMA 200 9.3k ish area? Of course we can. But overall, if we are looking at the price, like I said, very similar pattern. We have some sort of like a bullish pennant that we are forming, right, on the price as well. Oopsie. Yeah, but I mean, like I said, I'm not trading on during the weekend. That's the reason why I closed my long as well, because I don't want to be stuck in this you know. But it looks bullish. Like I strongly think that we will, you know, during the next couple of days, that we'll be going back towards this green box kind of. That's what I feel. The bullish divergence that is going to be playing out. So yeah. Could I be wrong? Of course I could be wrong. But that's still what I expected yesterday. That's still what I expect today. That's probably still what I expect tomorrow, except if we are going to be breaking this level, of course, right? So if this wick gets taken out, you know what to do. You know what to do. So if that wick gets taken out, then yeah, definitely go back towards our 9.6k 8.6k ish area, and not that bullish there. If we go back to 8.6k area, like I said, explained before, I do expect us a bounce, but that would be most likely. So if we do something like this back, we will most likely see a dead cat bounce towards this where the channel is formed, and then most likely head back down further towards the 7.8k or 7.9k area. So very important to notice. And if that happens, like I said, if that happens, it's time to short. It's just how it is. It's time to short. But for now, like I said, I don't see it happening just yet. I still believe that we'll have a bullish continuation. Maybe next week we have that pullback, but then that pullback is not going to be like that crazy as well. Like I said, around the 9k ish area here, where we have our EMA 55 once again, but maybe a little bit lower this time, because we already touched it last time on the EMA 55. So a little bit lower towards this support area here, or this bullish channel that we have been forming. So yeah, Yes, Darren. I don't like in this. I really don't like to be stuck in a trade during this weekend as well. But I'm just giving my opinion for people who do like to trade during the weekend. I'm not that bearish. I think we're gonna do something like this over the next couple of days. To be honest, that's still what I'm expecting. So for people who are bearish, yeah, I'm still bullish. Like I can't be, like I said, I can't be bearish until I see a break in the traditional markets. If traditional markets goes to shit, if it really gets that pullback all the way down towards the areas that we've noticed, if we go all the way back down towards this area here, then I might be a little bit more bearish. Let's put it like that. But until that happens, I'm like okay. I'm not that confident in saying anything like that. But yeah, let's take a look on the expected move charts, right? So what am I expecting? Well, top side around 9.750, that will be my top side, and downside would be this area right here around the 9,100. Well, not that low actually, 9,150-ish area, something like that, would be my downside. Let's take a look on the expected move charts. Expected move charts, what are you saying? Expected move charts, the top side of the range is 9,570 for the first standard deviation on the top side, and the bottom standard deviation is 9,264. As you can see, if we would go down to 9,264, would that break our pattern? No, it wouldn't break our pattern. So like I said, and it's angled towards the top side, as you can see, a little bit more towards the upside. So probabilities is that we are going up during this weekend is a little bit higher than lower. What is bearish? Bearish is of course the 12-hour Stokes. But like I said, I do expect this is actually quite bullish, while price is maintaining that the Stokes are going to go down and then reset and then will curl back up over the next week or something like that, or it will crash down lower all the way till end of next week and then go back up. So that's also a possibility as well, right? So let's see what happens over the next week. RSI, as you can see here, RSI is trying to curl up, but it will only cross up when we are above 9,549. So 9.5K or this green box, we all know that already. If we break out of this green box, 9.5K above this EMA 21, basically, I do expect us to go a few $100s higher towards the 9.750-ish area. So RSI is basically telling us the same thing. Let's take a look on the daily. What are you saying? Stokes are down on the daily, so this is not good as well. It's breaking this support trend line that I've been showing, so that would be pretty bad as well on the macro perspective. HVP is flashing. So that means, well, I kind of expect something really big to be happening on Monday. So Monday, most likely we will see something major. So that's the reason why I'm tending to be thinking that it's most likely going to be quite a substantial break on Monday. So like I explained before, during the weekend, most likely something going up like here, and then Monday, Tuesday, something like that will make this crash towards this side here, and that would be the HVP that is flashing on the daily. That's what I'm expecting or thinking. So and also because of the weekly close, like I said, on the CME and on the Nasdaq and on the S&P is showing continuation towards the downside. So most likely on Monday, if price gets up to like where I am expecting, 9.750-ish, 9.7K area, I'll most likely be thinking about taking a short from there. But once again, nothing is certain. That's why we're looking at this on a daily basis. But that's kind of my master plan at this moment as well. And the risk management is quite easy because we have this green box here. If we do break this green box, obviously we will be stopping out of our short. And other than that, it's easy to be managing our risk once again. So that's basically my main plan that I'm thinking about for this weekend. But we have to be patient and see how this weekend the price action works out, and then Monday when the CME opens up. But that's kind of my main thoughts right now. But I just wanted to explain that during all of this, I'm not that super bearish. I'm still not that super bearish. I will be more super. I will be very super bearish if the traditional market breaks down and we break the 7.5K on Bitcoin. Then that's another story. But until then, let's just take it day by day. So 4-hour Stokes are curling up. So yeah, like I said, in the short term, I still expect us to be going back up in the short term. RSI is above, a little bit above the EMA on the 4-hour. So yeah. I'll put this RSI on 9,750 to see, have an area to see where it is. And there, that will be here. I think 9.750 is a bit too high. I think let's put 9,700. That would be here. Yeah, that would make sense. So we have here a lot of tops here on the RSI. So yeah, I'll adjust my my target a little bit. 9.7 is where I'm targeting my area. So around 9.7, but of course we can wick a little bit higher. So 9.750. That's the area that I'm looking for. Okay, I guess that wraps it up for today. I hope everybody kind of is aware that I am in not a position for today. So yeah, to wrap things up, I'm still not that bearish. I do expect us to go up slowly during this weekend towards the 9.7-ish area. It's very, very probable, which the HVP on the daily is flashing, that we can have that breakdown towards the 9K-ish area once again, or we can also break up, of course, towards the 10.5K area if we manage to break through this green box here. But just looking at the weekly candles of the traditional markets and how they closed the daily, the last day and the last week, kind of feels like more continuation towards the downside first before we get the retracement, before we get the reversal. Let's put it like that. I still think this is just a small pullback. I still think we're gonna go back higher on S&P and on Nasdaq. So let's see what happens. If those things start crashing, then I'll be bearish and I'll have to put in some shorts. The only time that I'll be thinking about shorting is, of course, if we are breaking below this bullish channel here. That's it. I think that concludes everything, right? Yeah, that concludes everything. Well, hope you enjoyed it, and hope to see you again tomorrow, same time, same place, 7:30 p.m. UTC +8. Please like, share, comment, ask questions, whatever you want to do. I'm here. I'm always open for answering your questions if I can, if I'm legally able to answer, if I am able to answer as well. All right. Hi, Elena. Thank you for joining on the last minute. But yeah, I've given you guys kind of like my macro perspective and macro thoughts as well. So really don't see things to be that bearish, at least not until November. After November, or a lot of things will be happening most likely after the elections, right? And then we'll be seeing some more action. Let's put it like that. But for now, short term, very, very short term, before people are thinking crazy thoughts. Very, very short term. I still think that we're gonna be floating up towards like 9.7K or something like that. Next week, more likely probability, more inclined towards a dump of like $700 ish towards the downside, because the HVP is flashing for that. But it can also go from 9.7 towards 10.5. That's the same amount, so around $800 up or around $800 down. It's the same amount, right? So have to be prepared and aware for that. So that's the move for next week, basically. Monday, either a breakthrough of that green box to the top side and aim the long towards the 10.5K, or a rejection at the 9.750-ish area, rejection towards down. Then I'll be aiming towards 9K or 8.9 to 9K-ish area, or the bottom of this this channel here. So it's quite simple. It's quite simple trade. So nothing that difficult. For now, we are trending in between the two green boxes. And what do we do if we are in between the two green boxes? Absolutely nothing. We drink to that. So yeah, until tomorrow, please stay home, stay safe, and of course, stay COVID